Welcome, and thank you for taking the time to join us today. Your pension plan is a valuable part of your financial life, but unfortunately is often overlooked. This presentation will give you an overview of how your pension plan works. Here's our agenda for today. It's a lot of information, so if you have any questions, please type them in the Q&A box on your screen. Following the presentation, our Director of Pensions, Kevin Smiley, will be here to answer your questions. If your question relates specifically to your personal account, a member of our team will connect with you directly either by phone or email. We'll start by talking about how your pension plan works. There are many different kinds of pension plans. The IWA Forest Industry Pension Plan is a target benefit plan. This means that your contributions do not reflect the exact value of your pension. Rather, your lifetime monthly pension is based on a formula which multiplies your years of credited service with the applicable benefit level for those years. The more years you work, the greater your pension will be. It is important to note that as with all target benefit plans, your pension in retirement may be adjusted up or down according to plan funding. The pension plan is currently fully funded on a going concern basis. The benefit level has been adjusted over the years, so it ranges between $35 and $115 depending on the years you worked, providing that you worked for a full rate employer. The current benefit rate is $115 per month for 1 year of credited service. Your monthly pension income in retirement is based on a pension formula. Your monthly benefit is calculated by multiplying your years of credited service by the benefit rate in effect for each year. Here's an example of how your pension is calculated. The calculation is for a member with 22 years of credited service. As the rate changes throughout their career, they will receive a total of $1,521 per month for their lifetime. You can also see the new past service benefit rate for 2014 to 2021 here in the second column and the new future service benefit rate in the fourth column. If you'd like a pension estimate, you can easily generate one through your Member Connect account. One of the benefits of the IWA Forest Industry Pension Plan is the option for early retirement, which is available with most pension options. The normal age of retirement for the plan is 65. You have the option, however, of retiring as early as age 55. All active members are entitled to the subsidized early retirement benefit. An active member is a member who is contributing to the plan, while the deferred member is one who has stopped working or otherwise accruing service with the plan but remains a plan member. If you are an active member between the ages of 55 and 65, you are eligible to receive between 82 and 100% of your pension for the duration of your retirement. The illustration shows that percentage you qualify for based on your age and active status. Currently, nearly half of all retired members receive the subsidized early retirement benefit. If you are a deferred member, you have the option of receiving an unreduced pension from the plan beginning at age 65 or an actuarially reduced pension as early as age 55. The reduced payment reflects the extra years of pension income. Deferred members over 65 should apply immediately as the pension amount does not increase and the pension start date cannot be backdated. This illustration shows the percentage you qualify for based on your age and deferred status. Because government benefits begin at age 65, you can choose to receive a greater pension amount from the plan prior to age 65 and a smaller amount after age 65. The difference between the amounts paid before and after age 65 is intended to make up the difference you'll receive from old age security. Let's take a moment to understand the terms spouse and beneficiary. In Canada, the legal definition of spouse differs by province, and members will need to contact the plan office for the spousal definition that applies to their circumstances. On this slide, we've included the legal definition of spouse for BC. Pension legislation in BC prevents you from naming your spouse as your beneficiary because your spouse has priority rights over your designated beneficiaries. Beneficiaries are only entitled to survivor benefits if there is no spouse or the spouse has waived their rights. Other than your spouse, you may name the following as your beneficiary or beneficiaries: any person such as a relative or friend, an organization such as a charity, your estate. Note that if you do not have a spouse and you do not name a beneficiary, your estate will be the recipient of your survivor benefits. To name a beneficiary, you must complete the form Pre-Retirement Designation of Beneficiaries. A side note for any divorced or separated members, under the BC Family Law Act, your pension is considered family property. This means that if you divorce or separate, your ex-spouse may be entitled to a share of the pension that you earned while you were married or in a marriage-like relationship. The amount your ex-spouse is entitled to is usually specified in a court order or separation agreement. When the plan office receives notification of a separation agreement or court order dividing your pension, we are required by law to comply, and we will pay your former spouse's portion directly to them. When an ex-spouse is entitled to a benefit from the plan, they are called a limited member. There is a one-time fee of $500 to administer the division of pension and establish a limited member account. Pension options available to you will be determined by whether or not you have a spouse at retirement. If you have a spouse, you are required to select a pension option that provides lifetime coverage to them following your death, unless they sign a waiver giving up their right to the coverage. If you have an eligible dependent, you can appoint them as beneficiary of the survivor benefit, but only if your spouse signs a form waiving the right to the survivor benefit. Let's move on to your pension options. When you apply for your pension, you will be asked to select a pension option. Once you begin to receive your monthly payments, you cannot change your choice. Next, we'll move on to your pension options. With each option, we'll show you a short animated video and then follow with a recap for each option.
Under the Straight Life option, you'll receive a pension for your lifetime. While this option gives you the highest monthly pension, no further payments will be made after your death, not even to your surviving spouse, beneficiaries, or estate. This means that if your spouse or children outlive you, they will not receive any benefit payments from the plan following your death. To learn more about how these different options work, contact the plan office for more information.
To recap, the Straight Life option gives the highest monthly pension, but no further payments will be made after death. This option is only payable for your lifetime. This means your spouse or children do not receive any benefit payments from the plan following your death. Please note that if you have a spouse and wish to select this option, your spouse must sign a form waiving their right to the lifetime survivor benefit.
If you have a spouse who has signed a waiver in the required manner, you can choose the Life with a Guarantee option and designate any individuals or organizations as your beneficiary. This option does not provide a survivor pension to your spouse following your death. However, you may still include your spouse as your beneficiary or among your beneficiaries. With this option, you receive a pension for your lifetime and offer limited coverage for a single or multiple beneficiaries following your death. Your pension is guaranteed to be paid for a period following your retirement date, and the guarantee period starts once your pension commences. You can choose either a 5, 10, or 15-year guaranteed coverage period. If you die before this guarantee period ends, your beneficiaries will receive a monthly benefit from the plan up until the end of the guarantee period. If you die after the guarantee period ends, your beneficiaries will not receive anything from the plan. To learn more about how these different options work, contact the plan office for more information.
To summarize, guarantee options are considered short-term security for a dependent. If a member's named beneficiary passes away before the guaranteed period expired, they should elect another beneficiary. The most important thing to remember with any of these guaranteed options is that if the plan member passes away after their guaranteed period expires, no further benefits are payable. For example, if a member elects life with a 15-year guarantee and lives for 20 years, nothing further is payable after their passing. Again, if you have a spouse and wish to select this option, your spouse must sign a form waiving their right to a lifetime survivor benefit.
Joint and Survivor 60% is the legislative default option if you have a spouse. If you'd like to select an option other than a survivor option, your spouse will have to sign a form waiving their right to lifetime survivor coverage. With this option, you receive a pension for your lifetime. Following your death, your spouse will receive a monthly pension from the plan for the rest of their life. The amount your spouse will receive is between 60 and 100% of your pension income, depending on what you select. If your spouse dies before you, your pension payment amount remains the same and will end with your death. Note that if you divorce or separate from your spouse after retirement, your now ex-spouse will still receive a benefit from the plan following your death. To learn more about how these different options work, contact the plan office for more information.
Remember, the joint and survivor options are only available for members who have a spouse. If your spouse outlives you, they will continue to receive a percentage of your pension for their life, unless they have signed a waiver in favor of an eligible dependent. Should your spouse predecease you, there would be no further benefits upon your passing. And remember, if you choose a joint and survivor option and divorce or separate at a later date, you cannot change your option or your beneficiary.
Another spousal option is the joint and survivor plus a 10-year guarantee. This provides your spouse 60% lifetime coverage together with a 10-year guarantee period. Once your pension commences, the clock starts ticking on the guarantee period. If you die before the 10-year mark, your spouse will receive monthly payments that are equal to 100% of your pension for the remainder of the guarantee period. Following the guarantee period, your spouse will start to receive pension payments that are equal to 60% of your lifetime pension. For example, if your pension is $1,000 per month, and you die after receiving only 6 years of payments, your spouse will receive $1,000 per month for the remaining 4 years. After the guarantee period has passed, your spouse will start receiving their lifetime pension benefit of $600 per month. However, if you die after the guarantee period, your spouse will receive 60% of your benefit amount for their lifetime. In this example, your spouse receives a lifetime benefit of $600 per month after your passing. This is because the 10-year guarantee period has already expired. In the case where you and your spouse or ex-spouse die prior to the end of the guarantee period, your beneficiary is entitled to survivor benefits for the remainder of the guaranteed period. To learn more about how these different options work, contact the plan office for more information.
To recap, with this option, the 10-year guarantee period starts with your first pension payment. If your spouse outlives you, they will continue to receive 100% of your pension for the remainder of the guarantee period. When the 10-year period is over, their payments will be reduced to 60% of your lifetime pension. If you die after the guarantee period, your spouse would receive payments that are 60% of your lifetime pension. Should your spouse pass away prior to the guarantee period expiry date, you can elect a beneficiary for the remaining guarantee period only. A brief word about changing beneficiaries. Unless your spouse waives their right to a lifetime pension, and depending upon which option was selected in the spousal waiver, if you select a joint and survivor option with no guarantee, your joint annuitant cannot be changed after the start date of your pension and cannot be replaced even if your spouse dies before you. If you select a lifetime pension with a guarantee option, you can change your beneficiary at any time prior to the expiration of the guarantee period unless your spouse has waived their rights. Members who haven't worked for long in the industry will receive a smaller pension from the plan. If the lump sum cash value of the member's pension benefit is below the legislated threshold, members have the option to transfer the benefit out of the plan as a lump sum, less tax, or transfer to an unlocked RRSP. The current legislated threshold is $14,260. This amount is set by CRA and it changes every year. If a member's monthly pension benefit is less than $50 per month, members will not be eligible for a monthly pension at retirement, and instead they will be paid the lump sum value of their pension in their choice of cash or RRSP transfer, and their membership in the plan will be terminated. Let's take a moment to talk about excess hours. We get lots of questions about excess hours, so I want to take some time to address it now. Remember, the IWA Forest Industry Pension Plan is and has always been a group plan, where risks and contributions are pooled among all participants. All members benefit from being part of a large plan with secure finances, and members can elect to receive a pension from the plan for their lifetime. This illustration shows the way in which excess hours are used to fund benefits such as long-term disability, subsidized early retirement benefits, and involuntary job loss provisions. Employment in the forest industry is often seasonal, with members working periods of overtime followed by times of reduced hours. Here's how you can use your excess hours. In years where you work less than 1,800 hours, your accumulated excess hours can be used to bring you up to a full year of credited service. In this slide, you can see how Tim Burwood accrued excess hours in 2022 and 2023. The following year, in 2024, Tim only had 1,200 credited hours. In this case, we could top him up for a full year of credited service by using 600 of his excess hours. Excess hours can also be used at retirement to give you an extra year of credited service. In this example, this member plans on retiring January 1st, 2026. They have 2,000 accrued excess hours and can use 1,800 hours to receive a full year of credited service for 2026 without needing to work even 1 hour that year. Doing this will boost their pension income by $115 per month every month, year after year for the rest of their life. Your employee contributions will never exceed the value of your pension. At a minimum, members get out of the plan what they put into it. If you break service with the plan, you can choose to withdraw the lump sum value of your pension out of the plan. The lump sum value is calculated as the value today of your future expected pension. And here's how the 50% cost sharing rule works. If your total employee contributions plus interest make up more than half your lump sum benefit, you'll receive any contributions above the halfway mark back as a refund in addition to your full lump sum payout. The 50% cost sharing rule also applies to members receiving a pension from the plan. At retirement, we'll calculate the lump sum value of your pension, then you'll receive any contributions above the halfway mark back as a refund in addition to receiving a monthly lifetime pension from the plan. So whether you break service or begin your lifetime pension, you will at a minimum get back the value of what you put into the plan. Let's take a look at the application process. You must apply to receive a pension from the plan. It is not automatic. We recommend applying at least 3 months before you expect to retire, as it can take some time to gather the required documents and process the application. You can start to receive a pension as early as age 55, and you must start receiving it by December 1st of the year you turn 71. If you intend to retire in the near future, reach out and let us know. Our pension team will be happy to provide you with a pension estimate. When you've decided to retire, you'll be required to complete an application package. In your application package, you'll find the forms listed on the slide. In addition to filling in and submitting these documents, we'll ask you to submit a copy of your proof of age identification. This can be a birth certificate, driver's license, Canadian citizenship, Nexus card, or passport. If the name on your proof of age document is different from your current name, we also require proof of your name change, for example, a marriage certificate. This verifies who you are and helps to prevent fraud. This seems like a lot of forms, and yes it is, but don't worry, you'll also receive a booklet with instructions on how to complete these forms. We also recommend calling in or emailing us so we can go over the forms together. Your earliest pension start date is the 1st of the month following receipt of your signed pension application. Let's look at working after retirement. Under income tax rules, you cannot receive a pension in the plan and earn credited service at the same time. The threshold for a retired employee working for a participating employer equates to 25 hours per week, or 50 hours for a 2-week reporting period, or 100 hours for a 4-week reporting period. How does this affect you? If you work below the threshold, you can work and collect your pension as long as you stay below the threshold. During this time, you and your employer will continue to make contributions to the plan, and your employee contributions will be refunded to you. If you work over the threshold, your next pension payment will be suspended, and you will continue to be suspended until you submit an application to restart your pension. The plan office will notify you of your pension suspension and send you an application which you will need to complete when you are no longer working over the threshold. Please note, your earliest pension reactivation date is the 1st of the month following receipt of your signed application. And it's important to remember, if you work over the threshold and an overpayment occurs, you are required to repay the plan. So if you're retired and you return to work, or should your work status change while you're in receipt of a pension, you must contact the plan office. We do our best to provide accurate information, but not every rule or situation is covered. This presentation is not a substitute for the plan text, which is available by contacting the plan office. If there are any inconsistencies between this presentation and the plan text will always govern. To get the most out of your plan, it's essential you keep in contact with the plan office. This is so you receive the benefits you're entitled to. It's your responsibility to ensure that we always have your current address, phone number, email address, and beneficiary on file. Your annual statement will arrive by mail in June, and it will also be available on your Member Connect account. Please be sure to carefully review this to ensure all your information is accurate. Another way to get the most out of your plan is to sign up for Member Connect if you haven't already done so. With your account, you can securely communicate with the plan office, change your contact information, update your beneficiary, view your work history, generate a pension estimate, and more. If you haven't registered for Member Connect, all you need is access to your email and your invitation letter, which contains your activation code. If you don't have your invitation, please call the plan office and we'll be happy to look up your unique activation code for you. Once you're ready to activate your account, learn how by watching a video demonstration that goes through the process step by step. Just key in bit.ly/memberconnect-activate to follow along. We recently held a webinar which demonstrates how to use Member Connect. In the recorded webinar, you'll find video demos showing you how to generate a pension estimate, designate a beneficiary, and send a secure message and more. Just key in bit.ly/memberconnect-webinar to view this video. We also recommend following us on Facebook. This is a great way to receive plan information, resources, news, and reminders about your pension plan. If you have any specific questions about your pension, you can call or email the plan office and our team will be happy to help you. A reminder that we do not, however, provide any financial or legal advice.